Okay. Good evening, everybody, once again. So we can start the class now, please. So our time is going already. So just like I said earlier, our objective tonight is to solve this question and we close shop for today. So I'm trying to stream online so that So let me enlarge this for the people on YouTube. That it will be bigger. So I'm trying to zoom it. So let me just zoom it. I think it's fine like this. So, okay. So, okay, now we can start. We can start. So, okay. Is it too small or too big? This is fine. I still need to enlarge. Sorry. Okay, it's fine. Okay, okay. So now let's go. So before we start, I would like to tell everybody, please, this is September. You have 2 months to your exam. That November, please forget it. November will be running like machine. November is not for your exam. November is for your revision. If you really want to start now, please start now. September, October, please, for now, start now. That's the best. So that's by the way. So by the end of September, or at least first week of September, we are going to end all the classes. So we are going to be preparing for revision. So I just say I'm going to tell people in advance in case there are some topics we cannot cover, we are going to cover it during revision. So now, and I said it that the past question, do PLC. I'm finding the recording. I will share it. Then also I will upload another past question, sub past question on my YouTube. So if you subscribe to my YouTube channel, I think you can find it there. I will upload it tomorrow or over the weekend. So you have two past questions on sub that we have solved. So now, that is just by the way. So now let's move to the question and let's start solving. Okay. So please, if you have any question, please you can just use the chat box. I will read your question, please. Let's use the chat box so that we are not going to waste time. Let's use the chat box. I'm seeing the chat box now, so I can respond to you. Um, so someone said I should zoom in. I've already zoomed in, so I have zoomed in. So maybe I should zoom in. Okay, this is fine now. This is fine now. So look at the question. Question number one. Okay, the people on YouTube. My YouTube channel is already there. It's already there. Immediately you go to the group, you click on the link. The link I shared, the YouTube link I shared, that's my YouTube channel. You can subscribe so that anytime I upload any of the courses you can watch. There are some courses that we have not done that I've done. So just click on the link I sent to the group. You can see it there. So now let's go to the requirement of the question. What's the requirement? The requirement states that that we should prepare okay, where is it? Okay, this is B part. Okay, this is it. Prepare a consolidated statement of financial position of Bata PLC and its subsidiary as at October 31st, 2016. So if you look at it, now let's look at it. They said Bata, which operates in the manufacturing sector. The manufacturing sector has been striving the challenges operating in Nigeria economic environment. The draft statement of financial position of Bata and subsidiary as at 31st October 2016 are as follows. So they gave us PPE, investment in subsidiary, financial assets. I cannot see the screen. Please, it's your network, please. Just calm down. I know we are living in so many areas. Network are bad, some network are not good. So once you are in the call, please just wait. Your network will come back. So it will come back because I'm seeing my screen now. I'm using my screen. So if I cannot see my screen, I know people will not see my screen. So please just bear with us. So this is the drafted statement of financial position of the three companies. All figures assumed to be correct, right? So now we are now moving to additional information. So to make our job very easy tonight, look at the additional information. As I've said earlier, I said when I can't give you six, how many additional information we have here? We have six additional information. I said by default, you are going to know three. Out of the six, you will know three. You know why? The first additional information will contain the cost of acquisition, the means of acquisition, the retained earnings, and the like. So if you look at additional information one, additional information two, additional information three, those three of them, they are additional information you know. You know them. They will give you the net assets, they'll give you the balancing figure or and the likes if you joined the class last week. So now, out of those additional information, it is very likely in group account, please take note. It is very likely they are going to test impairments. So if you look at additional information 4, impairment test was carried out in the subsidiaries, and it was discovered that GABA suffered no impairment loss due to a line with bill. However, JW had suffered impairment loss of 60 million. So another thing I said last week, in professional level, when they set group account, please go and check how we calculated impairment last week. They are going to test impairment. They will ask you to calculate impairment because that impairment is going to affect our goodwill. However, in this question, we are very lucky. They gave us straightforward. They gave us impairment loss of 60 million. We are lucky in this question. And why? This question is November 2016. It is a period whereby when they write, I can fail one, fail all. If you remember that period. So those questions, if you look at it, and that's the reason why we are solving this. During revision, we are going to solve a more thicker question. Because during this period, they are writing fail one, fail all. They are writing 5 papers. And if you fail one, you fail all. So the question examiner are testing is somehow easy. But during revision, we will have time because we'll be lecturing, we have revision for like 4 hours or 3 hours plus. Not these 2 hours we are using. It cannot reach anywhere. So that's additional information for impairment. So additional information 5 is unrealized profit information. They give us information that the parent company sold Bata, sold inventory to Jewe and Gaba. So they are giving us unrealized profit information. Why the last additional information is what? Is IFRS 9 financial instrument in which the parent company purchased a deep discount bond. So as I've said earlier, in group account, there is no way they are going to test a standard. And that is why you cannot run away from standard. Please don't run away from standard though. It's only group account I know. They will test standard though. So this is IFRS now. The question we solved last week, they tested IFRS 9. That was IFRS 39, which is financial instrument classification and measurement and presentation. Sorry, measurement and classification and measurement, IFRS 39. So these are the additional information. So we want to be very fast tonight. We don't need to read additional information. So when we solve, we can now do our additional information. So I have sent the question to the group, right? Please, let's follow up with the group. In case you want to check the question, because I have to present my Excel sheet now. So when I show my Excel sheet, so that we can now start solving together. And remember our approach. Our approach is the best. It is the normal approach, whereby when you want to solve your group account, please don't forget, for the people just joining us today, I know there are some people that just joined the group. Don't start with question number 1. No. Please don't start with question number 1 in group account. Start with section C, section B parts. Start with it. At least you see some standard that you can solve. So when you now solve two questions, you can now move to question number one. Don't always start with question number one until you see that, okay, this is a repeated question. I can repeat a question. There are sometimes I can repeat a question. That when you see it like this, I've solved this question. I can just change figures and additional information. Then you can start with number one because you have solved that question before. But if you have not solved that question, it is not advisable to start with question number one. So whenever you want to solve question, so now let me open my Excel sheet. Now let me stop this. We are going to be reading it together. Everybody is going to be looking at their phone. For the people using laptop, then I'm going to be reading here. So let me stop this, please, and let me share my Excel page, my Excel sheet, so that we can start solving. I want us to, okay. So hope you can see my Excel sheet, right? Okay, okay. So now we are going to be reading the question together and we are going to be solving it together. What is the approach? The approach is that when you want to solve group account, being it question number 2 or 3, please just open two page. Open two page for your solution. Open two page. Depending on the question, if you look at this question, if you look at the balance sheet they gave us, I think you can use one page. I think you can use one page for your solution page. Leave it. Just go to your balance sheet. Pick the figures in the balance sheet. Import it in your solution sheet. Put it in your solution sheet. It will give you confidence because the only problem in group account, do you know the problem in group account is additional information. Once you see somebody that can guide you, the only problem in group account, even in cash flow, when we solve group cash flow next 2 weeks or next 3 weeks, I'll show you. The problem is additional information. The problem in solving question is not your problem at all. The problem is additional information. And out of the additional information, you will know half. If I can't give you 6, you will know 3 or 4. The remaining 2, do you have idea? Yes. Do your best. Leave the rest for Almighty God. If you do not know the 2, you just debit one place and credit your retained earnings because those additional information will affect your retained earnings. Just put it in your retained earnings and balance your balance sheet very well. At least you will get 20 over 30. If it's 30 mark, I'm telling you, you will get 15, you will get 18. Despite you did not finish the additional information. All those additional information is not like 5 mark or 10 mark. Oh. It's like 3 mark. If you go to the marking sheet, you see that it's like 3 mark or 3.5 mark. All this additional information. So don't let anybody to just understand the principle. So now let's go now. Now, if you go to our Excel sheet now, yeah, let's go together. Let's give us the drafted sheet, Abby. So the first item is PPE, right? So we already know that this is sub-sub, right? And how will you know that this is a sub-sub? The reason why we know it is a sub-sub is that let's look at our additional information one. Additional information one, they gave us bata. If you remember very well that the parent company, according to the requirement, they said it is bata, right? So bata is the parent company. They asked us to prepare bata consolidated statement of financial position as at when? As at October 31st, 2016, right? So this is the requirement. Now we know that Bata is the parent company, but which Jewe and Gaba, who are both of them? We don't know. So if we check additional information one, they said Bata acquire 60% share capital of Jewe, right? So Bata acquire 60% share capital of Jewe on October 1, 2012, right? And 10% in GABA. That means an ordinary investment in GABA. Now, the cost of the combination, we have 852 million and 258 million. If you add both of them together, it will give you the cost of investment in balance sheet, which is that 1,110. If you add both of them together. So now, to now tell us that this question is sub, they now told us that Jewe acquire 70% of share capital of Gaba. Can you see now? Bata acquire Jewe. Jewe now acquire Gaba. You know, since Bata acquired Jewe, Bata is the parent company, while Jewe is the subsidiary company. Now, Jewe have acquired Gaba too. So, what are we saying? Let me quickly discuss this additional information. One, let's quickly treat it in the group structure. Please, people, are you seeing my screen? Can you see my screen very well? So please let me enlarge my Excel. I think my Excel is large enough. Is it large enough? Is it fine? Okay, okay. So I can, it is okay, okay. So for the people on YouTube. So now, please look at my screen. Let's quickly do this group structure. And please, for the people just coming from skill level, I just remember now. Please, for people coming from skill level, please take your time. After the class, you can watch the video again because you have not done this thing before. In skill level, the group account you did in skill level is just an ordinary group account. But in professional level, you do complex. This is complex group structure, where this one will be acquiring this one will be acquiring this one. So all these group accounts, for the people coming from skill level, please let's take note. So let's construct the group structure. Let's construct it together. Now, they said Bata acquire 60% share capital of Jewe Abi. So now let's construct that group structure. There's my shape. So this is my arrow. So let's construct a small group structure. So let's do like this. Let's change the shape color to black. Okay. And let's bring it down. So now let's copy this again. And let's bring it out. Okay. Now, this is what they said Bata acquire 60%, right? So Bata will be here. Bata PLC, right? Now, they said Bata acquired, so let's shift it here like this. Okay. Bata acquired who? He acquired Jewe Abi. So we'll put Jewe down here. Jewe PLC. So Jewe should be here. Now, and they told us that Bata also acquired Gaba for 10%, Abi. So let's draw another shape. Let's draw another shape. Because Bata also acquired Jewe. So this group structure is somehow funny. But let's just manage it like this. Let's manage it. He also acquired Jewe. Now, they now say that Jewe acquired Gaba, Abi. So what are we going to do? We are going to draw another group structure. And that is what they call sub-sub. Sub-sub is somehow complicated. So the relationship between parent and subsidiary is that this is it. So, okay. Okay, let's just manage it like this. We are using Excel. So this is Galba. And that is how sub-sub works. So Bata acquire Jewe, then Jewe acquire Galba. So relationship between Jewe and Galba is that it is a relationship between Jewe and Galba. But since Bata is the parent of Jewe, so Bata will be the ultimate parent. We have two types of parents. ultimate parent and intermediate parent. So the relationship between Bata and Jewe is that Bata is the intermediate parent to Jewe, but Bata is the ultimate parent to Galba. So that is how if you remember my first class, I took my time to explain all this. So now, where are we going to put the group structure? So let's put the group structure here. So Bata acquire how many percent? 60%, right? Bata acquire 60%. So let's put that 60% here. Ehen. Now, now, Jewe acquire how many percent? 70%, Abi. So let's put 70% here. So Jewe acquire 70%. Now, but Bata also acquire what? Bata also acquire 10% in Galba. So this is the group structure. So this is it. Bata acquire Jewe 60%, then Jewe acquire Galba 70%. So whenever you are doing this, there are going to be two things. There are going to be direct control. There are going to be direct control and indirect control. Indirect control. Remember that when a parent company has what? Has more than 50%, we can say the parent has acquired the subsidiary, right? So relationship between Bata and Jewe is that Bata has direct control. So our direct control is 60%. Direct control is 60% because Bata directly acquired Jewe. That is why they call it direct control. But what is indirect control? Indirect control is a situation whereby Bata now acquire Galba. But Bata acquired Galba indirectly. It is not directly. Please, are we together? Please, are we together? Yes. So Bata acquired Galba indirectly. It is not, that is why they call it indirect control. That is why they call it indirect control. So Bata acquire Galba indirectly. So how are we going to calculate the control, the percentage of control? This is how we are going to calculate it. Please just follow me. Be with me, please. Be with me. Just let me use one of my lecturer's language. Just be with me. Just wait. Before we ask questions, just wait. I know this one will be like down here now. So direct control is 60%, Abi, because Bata acquired Jewe directly. But Bata acquire Galba indirectly. So how are we going to determine the indirect control? This is what we are going to do. We are going to say 10%. You know what? You know Bata acquire Galba for 10%, right? So that will be 10. Then it will now be the percentage of control between Bata and Jewe times Jewe and Galba. And that is how you'll be calculating your control. So if you press your calculator, if you press 60 over 100 times 70, what is it going to give us? 60 over 100 times 70, it will give you 42. It will give you 42. Let me do it. Please look at it very well. So for people joining from skill level, please, let's look at it very well. So it will be 10% plus 60 over 100 times 70. So you are going to get what? You are going to get 42. So it will be what? It will be 10%. Let me break it down so that it will not cause wahala. Plus 72 plus 42. So the indirect control will be 52%. So finally, Finally, hmm, finally, our our direct control will be 60%, while indirect control will be 52%. So let me highlight it. So whenever we are starting our group account, when we want to do our group account now, these are the 2% of control that we are going to be using. So, and what are we saying? You know, according to this question, our subsidiary A is who? Is Jewe, right? So let's put Jewe here. Jewe will be here. That is net assets of Jewe, Abi. Now, the second additional working note 2, it will be net asset of sub. This one will be sub. And it will be what? This one will be Galba. So, and here, anything we are doing here, we are going to be using 52%. And anything we are doing here, we are going to be using 60%. So that is that additional information 1. So, but although we are still coming back to it because we will treat all the necessary things. But please, let's take note of this. So, do I have any question in my chat box? Somebody say I should come back in control. Please, don't let us come back home. Okay. Let me just quickly wrap it up. I will wrap it up because we don't have time. Please, we don't have time more. We have a long way to go. We have not started solving questions. Now, let me wrap it up. Bata is the parent company. Bata acquired Jewe. Now, just calm down. I will explain better. Don't worry. Bata acquired Jewe 60%, right? That control is direct control because Bata directly acquire Jewe. Now, if you look at that question, they now said, and Bata also acquired 10% in Galba. So there is a direct investment. There is direct investment. This 10% is not control. This 10%, any time that an entity buy the shares of another entity, and it is less than 20%, it is called an ordinary investment. So this 10% is an ordinary investment. It is not control. It is an ordinary investment. Now, but when we are doing sub, we must find the indirect control. That means control between the subsidiary and sub-subsidiary. So if you look at it, how are we going to get it? The rule is that this is a rule that we must all follow. Okay. This is the rule that we must all follow. When you want to get your indirect control, you will find that 60%, 60 over 100 times 70. You now press your calculator, you get what you want to get. Then, since we have 10% before, you now add it to it. Assuming we do not have 10%, your indirect control will be 42%. Assuming we do not have 10%, your indirect control will be 42%, and you will consolidate. You are not going to look at the rule that, maybe if you have 50%, please, when it is sub, please forget about that. Please take note of that. Assuming we do not have 10%, you just get 60 over 100 times 70, you get 42. So this place will be 42. Where I have my 52, it will be 42. Then your NCI will be what? Will be 58. So that 10% is a direct investment. It is not direct control. It is a direct investment. And whenever you are solving, and that's why I said, when you solve one past question, it's a problem. Okay, assuming it is 20%, is it associate? No, you can say it is an associate when he bought it. 21%, you can say it is associate. However, for you to determine your indirect control, you must add that 20% to this again to get your indirect control. And that is why I say you must solve many past questions. This is your 70%. See, this is your 70%. This two is what you multiply together. 60 over 70. This is what you get. So fellow subsidiary is different from sub-subsidiary. Please, this is sub-subsidiary. It is complicated. And that is why I said, by the grace of God, tomorrow or next tomorrow, I will upload the second solution, which is it November 2022 or something? I will upload it on my YouTube so that you solve two past questions. Doing revision, we solve another one. The more you solve question, the more you will understand. If you solve one past question, you now go to the exam. Please, you are joking. Oh. You are joking. You must solve at least 3 to 4 past questions before you can go to the exam and be confident that, okay, I can write exam. 3 to 4 past questions. Only one is not out of, is out of it. Oh. So that's it. So now let's go now. We have sorted this direct control and indirect control. So now let's go. Let's go. So this 60%, 70%, they are inside the question. They are inside the question. So now let's go. Let's go. Let's go. Let's go. Our time is going already. Now let's go now. They said, okay, the cost of this combination was where 852 million and 258 million. So that's additional information one. So before we start additional information one, let's quickly do what? Let's quickly empty our balance sheet. Please, let's quickly empty our balance sheet. So now let's go back to our balance sheet. How much is our PP? Our PP for the parent company is 4,320. Remember, we are using the fundamentals of IFRS 10. IFRS 10 says that whenever you are consolidating, the parent company and the subsidiary assets must be combined, must be added together. So if you go back to your question, go back to your balance sheet, PPE for the parent company is this, then PPE for subsidiary Jewe is this, plus PPE of sub-subsidiary GABA is 420. So the standard say we should add it together. So what's the next item? The next item is investment. But before investment, please recognize your goodwill. Please don't forget. Before your investment, goodwill will not be in your question. No. Please, you must remember that you must recognize goodwill. So what if we calculate goodwill? Goodwill is 0. And don't worry, just put 0 here. Just put dash here. Or write 0 here. Examiner will not kill you. But recognize your goodwill. Put it working note 3. We will determine our goodwill working note 3. So the next item is what? Investment in subsidiary. So investment in subsidiary. Investment in subsidiaries. Sorry about this. So investment in subsidiary. Let's just short it. So now, as we are doing revision, we can now move to the next level. Just do what? That investment, 1,110 plus this, just add it together. Don't worry, add it together. Now, what is the next item? Financial asset, Abi. Financial assets. So this financial assets, there is a workings. There is a working note there. Please, there is a working. Let's just do what? Let's just create a working note for it. Let's leave it. So immediately after your financial asset, we are done, Abi. Please don't forget. Let's leave 3 lines. For example, let's leave 3 lines. There are some adjustments that will happen in the additional information that you just add here. In the example, leave 2 to 3 lines. If you want to have rest of mind, please leave 3 lines. Leave 3 lines. What if we did not use these 3 lines? What will the examiner do for you? No, examiner cannot do anything. In fact, it will allow your book to be neat. Just leave these 3 lines in case there is an adjustment. Now let's move to current assets. So we have only current assets. So what is the current asset of the parent company? 1,050 naira plus what's the next one? 570 plus 540 plus 540. So we are done with this. Now let's move to the next one. After your current asset, please leave 2 lines or 3 lines again. There are some adjustments. If you remember last week that we did that the examiner tested IFRS 5 discontinue operation, you remember that we recognize it in the balance sheet. So if we do not leave 2 lines, how are we going to recognize it? So please always leave 2 lines. Now let's move. Share capital 1 naira shares. So the parent company, this is the parent company. So but for exam purpose, in final level, please, it is parent only. Just put that 2,400 here. There can be some additional shares in the question, so we can recognize additional shares. Now, where is the share capital of Jewe and Gaba is going? So that the share capital of the subsidiary and sub-subsidiary will be here. How much is it? Now we are going to Jewe. So they gave us 600, Abi. So that 600 will be here. Then 600 will be also be here. Now they gave us 300 for what? For Gaba, Abi. So ordinary share of Gaba is 300. Remember, it is parent only. That means it is only parent company share capital that is coming to your balance sheet. The subsidiary share capital is not coming there at all. And that's why I put parent only. Only parent. Now, retain earnings. So retain earnings of parent company. How much? 3,410. They said we are going to get it from our working note 5, right? So let's go back to our working note 5. So what's the retained earnings of the parent company? Just put it down. How much is it? 3,410, right? Now, what's the retained earnings of Jewe? So they also give us, go to your working note 2, Jewe. Now, we have DOA and DOC. So at this period, please, all your balance sheet figures is going to your DOC, because that's your balance sheet date. How much is it? Egole 540, right? So it's going to your balance sheet. So what about the last one? 390. What is that? The retained earnings of Gaba 309. Sorry, it's 390. Now we are fine. So what's the next item? They gave us OCE, other component of equity. So OCE of who? Who only have OCE? It is only the parent company that have OCE. So let's put it here. How much is it? 450, right? So the parent company does not have OCE. The subsidiary does not have OCE. Then this one. So since we do not have OCE, we can delete this. Since they do not have OCE. But in the exam, if you put your OCE, just put dash, dash, dash. Nobody will harm you. Nobody will penalize you. But for classic, let's remove OCE. There's no OCE for Jewe and there's no OCE for Galba. Both of them did not have OCE. So let's remove them. They only have ordinary shares and retained earnings. So now let's go. So this one too, let's remove this. Okay. So what is the only thing left with? So we are only left with current liability. So they give us current liability of the three of them. Please don't forget, immediately after your OCE, please introduce your NCI, because we get our NCI in working note 4. Now they give us current liability. So how much is the current liability of the parent company? 720 plus parent company subsidiary 390, then plus 270. So three of them we have recognized it, and immediately after that, please recognize 2 or 3 lines. So what we did now, it will not take you more than 10 minutes in the exam. Within 10 to 15 minutes, you are done with what we just did now. And with this only, you are fine. You are definitely fine. It will give you confidence. All we have left is what? Additional information. So we are moving to additional information. We have emptied our balance sheet. We have done the necessary things. We are moving to our additional information. So now, so are we good to start with the additional information now? Okay. So, okay. I want to check maybe I have any question. Okay, I don't have any emergency question in my chat box. So, if you have any emergency question, please go to your chat box. Just drop it there. We will check as we are going. You know, we are looking at the time. We are looking at the time. Don't worry. So now let's go. Let's go. Now we have this information before. They said Bata acquire 60% of share capital of Jerry, right? On 1st November 2012. So in our group structure, we can recognize that parent company acquired subsidiary on when? On 1st November. So you can put it by the side like this. 1/11/20 what? 2012. Just put it by the side. That's the date of control. That's the DOA date. Then, sorry, excuse me, please. Sorry, excuse me, please. Now, then the cost of the business combination we are 652 and 258 respectively, right? So now let's quickly recognize that. Where are we going to recognize that? In our goodwill calculation. So cost of acquisition of both of them, they said, let's use the opportunity. We have two Abi, we have Jewe. So Jewe should be here. Then Gaba should be here. So they gave us the cost of acquisition, which is the direct cost of acquisition. How much is it? 852 million. 852 million. Then this one is 258 million. But remember that this 258 million is for 10% too. So when you add these two together, how much is it? 1,110. That is what they give us in the balance sheet. This 1,110. That is the breakdown of this 1,110. So immediately you take that 1,110 to your goodwill calculation. It is better to remove this one, that 1,110 here, remove it here. Immediately you recognize that, remove it from here. And this approach is actually the best. Do you know why? There are sometimes they will give you investment. How much? 500 million. However, the parent company has some investment. So if you use this approach will give you an insight if the parent company still have some investment because you have balance here. But if you go and use another approach, because we have too many lecturers lecturing in Nigeria, if you go and use this approach, if the parent company have a lot of investment, it is possible you will not get this balance. But if we use this approach, we can get our balance and will be correct at all time. So please let's go ahead. Now they said what? Jewe acquired 70% share of Galba on November 1st, 2013. So let's quickly deal with that. On November 1st, 2013, Jewe acquire on November Abi, which is 1/11/2013. Jewe also acquired Galba. So we have dealt with that. Remember that this 10% was also, but it was an ordinary investment. So we don't need to recognize date of control. So just leave it like that. Now, how much is the cost? They just told us that Jewe acquired 70% of share capital of Gaba. How much? They did not tell us. And that is how examiner test us in the exam. Examiner test our intelligence that how much is the cost of investment? They did not give us in the additional information. However, they gave us in the balance sheet. They give us in the balance sheet, which is this 600. So the 600 is the cost of investment that Jewe invested in Galba. So if you understand group account very well, there will not be problem in the exam. Assuming we don't understand now, we will be finding cost of investment everywhere. Now, let's go now. Let's go. So how much is it? The cost of acquisition, Jewe in Galba is 600 naira, right? Now, there is now a question. There is something that we need to show here. We need to show. It is very, very important. Very, very important. When we are calculating our goodwill, you know, whenever you want to calculate your goodwill, what is the formula? The formula is cost of investment, add NCI value at DOE, right? Less your net asset, you get your goodwill. Now, whenever you are doing sub-sub, please take note. You must add another column here. Sorry. Okay. I want to insert a column at the top. Now, whenever you are doing sub-sub, this cost of acquisition is called direct investment. Direct investment. They call it direct investment. Because why are they calling it direct investment? It is a situation whereby the parent company acquire the subsidiary directly. So, and if you look at that question very well, you agree with me that they told us now that Bata acquired 60% and 10% shares in both of them directly. So now there is another thing that we need to add. They call it indirect investment. Indirect investment. Indirect investment. So what is indirect investment? Please let's listen to me very well, because this one usually cause wahala very well, but let's listen very well. In case some people will call me now, please explain again. Please let's listen very well. Now, for we to calculate goodwill, we need to add cost of investment, add NCI value at DOE, right? Then less net assets, we get our goodwill. Now, there is now a problem in sub-sub. We want to get the investment in, okay, now we want to consolidate. We want to consolidate Galba, the parent, and the parent, which is Bata, and Galba. Now, the question is that what is the investment? What is the cost of investment? The cost of 42% investment, which is the indirect control. The question is that the answer is nil. Why? Because Bata, the parent company, did not acquire Galba directly. He gained control indirectly. We just want to consolidate. Okay. Now, indirect investment, when we want to get it, we will now use the investment in which they were used to acquire Galba for the parent company. What are we saying in a nutshell? What we are saying in a nutshell is that for us to get this indirect investment, parent company in Jewe, there is no indirect investment. This one will be dashed. There is no problem. There is no problem here. But here, there is a problem. So for you to get your indirect investment, what are we going to do? How much is the investment? How much? 600. We have checked it, 600. You now use the percentage of control between Bata and Jerry. How much is it? 60%. multiply by 600. That will be the indirect control. So 60% over 600. When we press calculator, it will be how much? 6 times 6 is 36. So this will be 360. So whenever you are doing sub, we must always remember this. Please, we must always remember this. For you to get this direct investment, you check the percentage of control between parents and subsidiary, not sub-subsidiary o, parent and subsidiary. Let me write it here. Parent company percentage in subsidiary. Let me write it in full because this one is wahala. And parent company in not sub-subsidiary, in subsidiary, multiply by cost of investment. So this is Excel. Don't worry, you get this Excel. So whenever you want to get this indirect, it is parent company percentage in subsidiary. So parent company percentage in subsidiary is 60%. But parent company percentage in sub-subsidiary is not 60 o. It is how much? It is 52%. Shebi we remember very well. That one is 52. And that is why I help us to write it here. Parent company percentage in subsidiary. Now, immediately you do this, you now do another thing. Immediately, you now go to your NCI value. Your NCI, immediately, now you now go and less that amount. Let me quickly take care of that. So what are we going to do? Let's do copy and paste. And that is the problem of sub-sub. Sub-sub have problem. In case you don't know, for the people that don't know, it has problem. So it has problem. That problem, you must recognize it. That is why we are recognizing it again. So for you to get your indirect investment, that is what you will do. So this indirect investment, immediately, you now copy this again. You copy this. You now take it here. This indirect investment, you paste it like this. Let me use this example after. You now use 40% here. You know, we use 60. NCI will be what? 40, right? 40% of 600. How much is it? 6 times 4, 24, Abi. So this one will be 2,400. Abi 240, sorry. Since this one is 320, this one will be 240. So at all time, this is how you'll be treating sub-sub. That 60% will be cost of indirect investment. Then immediately you now less 240 from NCI of Jewe. And that is how you are going to be solving every question. Assuming we are solving another question, if this one is 80%, parent company investment in subsidiary, if it is 80%, when you come here, this one will be 20% of that cost of investment. So let me write this one in full. It will be parent company percentage in subsidiary multiplied by cost of investment in sub-subsidiary. All this app. Which time is this? After 10. Okay. So parent company percentage in subsidiary multiplied by cost of investment in sub-subsidiary. In sub-subsidiary. So whenever you are solving, and that is why I said it, please, you have to solve many questions for you to say that, okay, I want to go to the exam hall. So immediately you add this to this, then you now do what? You now less this, the NCI percentage of that cost of investment, you less it from here. That is the treatment. That is how you will be doing at every time. That is how you'll be doing. No. Please, is this noted? Please, is this noted? Let me see your reaction. Please, let's note it. That is sub-subsidiary. That is the problem. And once you can understand this, please write it in your notes. And that's why I help you put it in the Excel so that you'll be remembering. You add that 60% in good recalculation. You less this one from NCI. So once you can, even though you don't remember, please cram it. Let me use that language. Please cram it. You must cram it too, because it is something you cannot avoid when you are doing sub. In fellow subsidiary, there is no problem like this. That one is straightforward. But in sub, that's the problem. Oh, yeah, let's go. Yeah, let's go. Yeah, let's go. Let's go. Ẹjẹ́ too long. Ẹjẹ́ àlọ́. Apologies for the people that don't understand your power. I'm saying we should go. We should go. We should go. Let's go. Let's go. Now, we are done with additional information 1. Thank God we are done with additional information 1. Now, let's move to additional information 2. Please, are we together? Let's move to additional information 2. Let's go. Let's go. Let's go. Let's go. Now, the balances on retained earnings, we are dash. We are so. All figures assumed to be correct. So they gave us the retained earnings. Now, what the examiner is giving us here, examiner want to give us wahala. We know that they know that these people are in professional level now. If they are in professional level, they are no more in skill level. Let them use their brain now. So now examiner want to give us wahala, but you have to calm down. They give us the retained earnings balance. Now the question is, when did the parent company purchase subsidiary? And that's why I take this note. I quickly noted it here. 1st November 2012, Abi. 1st November 2012. So the retained earnings as a DOA as at 1st November 2010 is what? Is 270. So in the exam hall, if you go and pick 360, please, it's a problem. Is a problem because the date of acquisition is 1st November 2012. So examiner put that 360 there to cause wahala, so that some people will make that mistake if you do not read the note and you don't understand the principle. So when you go back to the question, that 360 in November 2013, it is not, we don't need it. Now let's go to GABA. What is the retained earnings as at DOA for GABA? So when is the control date? The date of acquisition for GABA. When is the date? 1st November 2013, right? 1st November 2013. 70%. So now let's check the question. Which retained earnings falls in that date? If you look at it, 1st November 2013, so it is 240. So your retained earnings as a DOA is 240. So here, that additional information too, you have to be careful. You have to be very, very careful, or else there will be kasungu. There will be kasungu in that place. So if you are not very careful. So we have dealt with this, Abi. So now let's get our post-acquisition, please. B minus A, Abi. B minus A. Sorry. It is B minus A. That means DOC minus DOA. Then we can get our post-acquisition. So now let's draw it down. Let's draw this formula down. So our post-acquisition in Jewe is 70, right? However, there are some adjustments to Abi. Now, what about this? Let's copy that formula. There's a formula here. Let's copy it here. So let's draw this thing down. Let's draw it down. So when we draw it down, our post-acquisition is 150. Looking at our retained earnings. So now let's go. Let's move to our additional information 3. Past 10. Our time is going on. Now let's go. At the respective date of acquisition, the fair value of net asset of Jewe, the fair value of net assets of Jewe was 930 million, while Gaba was 660 million. So now, just like I said it last week, examiners sometimes they make life easy for us. Look at it. They give us the net assets. This net asset of Jewe, how much is it? 930 million. Now, and they told us that Gaba is how much? 660 million. They give us. So now let's continue. They said the difference in the fair value and the book value of the net asset at acquisition date relate to what? Non-depreciable land. So there is a difference. How are we going to know there is a difference? Please, let's look at my screen very well. When we add both of them together, how much is it? 870. Now, the balance is 930 and we got 870. So there is a balancing figure. So that balancing figure, what are we going to do? You just do 930 minus this minus this. We get our balancing figure. So our balancing figure is how much? Our balancing figure is 60. And the examiner told us expressly, they told us that the fair value, that difference relates to non-depreciable land. Non-depreciable land. So the examiner love us. Wow, the examiner love us. They don't want to allow for us. So this place is not the balance here is non-depreciable land. In fact, the two balances, they said it is non-depreciable land. And please remember, land does not depreciate, right? Land does not depreciate. So this is balancing figure. Why are we calling this one balancing figure? It is the difference between this and the addition of this. So there is a balancing figure of 60. Please don't forget, immediately you put this 60 here, put it here also. So put it here also. Put that 60 here also. Let me put it here, 60. So that this one will be dash. This balancing figure must not affect your retained earnings. It must not affect it. And immediately, please don't let us forget, immediately you credit your equity, your retained earnings of subsidiary. Please, let's go back to our solution and debit that PP to increase our PP. We need to increase it 60. So we need to quickly increase that our PP by 60. So it will call it fair value adjustment. So let's quickly go. Let's go. Now, is there a balancing figure here? Let's check. 540, right? So 540, there is a balancing figure here. Examiner has helped us. Examiner said it is as a result of non-depreciable land, Abi. Please, I said it last week. If this one is non-depreciable land, if it is a depreciable asset, we will calculate depreciation. Please don't let us forget. We will calculate depreciation if this one is a depreciable asset. But since this is a non-depreciable asset, we can do what? We will not calculate depreciation. We will not calculate depreciation. So this is 120. So this 120 should also come here immediately. And immediately that 120 comes to that place, don't forget, please don't forget. Let's go and adjust it here too. That 120 should come here too to increase this. So that is it. Now, let's go. We are in additional information too. Let's finish up additional information too. I said the fair value of NCI in Jewe at the date of acquisition was 390 and for Gaba was 330. But adopt full goodwill method. Please, just like I said last week, please look at the group structure before you recognize that fair value, that NCI fair value. That was the trap we avoided last week. In that question, the NCI, the group structure, the group policy was proportionate net asset method. And examiner give us fair value, which we need to ignore. And I said it that majority of us in the exam we will not ignore it. We will make that mistake. So please let's take note. Let's check the group policy. So they gave us the group policy. They said the group policy is full goodwill, and they gave us NCI value for Galba. How much? Egole 390, right? And for Jere 390, and for Galba, how much is it? 330. So these both of them, please don't forget, copy and paste it immediately, because you debit goodwill for your goodwill acquisition, then you credit this NCI. Copy it, copy and paste. You use it, the same value, just copy it, just paste it here immediately. Now they said, but I don't full goodwill. So we are done with additional information 2. Additional information 3. We are done with that. So since we are done with that, can we quickly do what? Can we quickly get our purchase consideration? Let's quickly get our purchase consideration using our Excel. So this is our purchase consideration. So let's drag it here. We get our purchase consideration. Oh, so what is our net asset as our DOA? They gave us already, Abby. They gave us in the question. For this one is 930,660. So this is 930. This is 930, and this is 660. Please, if I make any mistake, please let me know. I'm on my Excel sheet too. So we have our net asset already. So we can get our goodwill, right? Can get our goodwill. So purchase consideration minus net assets, we can get our goodwill. So our goodwill is 312. Then if we copy this formula and paste it here, we get our goodwill for GABA 2. We get our goodwill for GABA 2. So we are done with additional information 2, right? Yes. Now, can we move to additional information 4? Can we move to additional information 4? Yes. Yes. Let's move to additional information 4. Okay. Somebody say my screen is not showing. Is it true? Is it true? Please, can you see my screen? Please let me know. Okay, they said it's now showing now. Okay, thank you very much. So now let's move to additional information 4. They said, given the economic environment, that is additional information 4. We are going to additional information 4 now. So additional information 4, I think that talks with impairment. They said, given the economic environment in the country, impairment test was carried out in subsidiary. It was discovered that GABA suffered an impairment loss due to the line of business. Suffered no impairment loss. Sorry, GABA suffered no impairment loss. But Jere suffered an impairment loss of 60 million. So they said Jere suffered an impairment loss of 60 million. So please don't forget, let's go and learn how to calculate impairment too. In professional level, you cannot escape it too. Please expect it. Sorry, I want to. So this goodwill, there's an impairment of 60. So impairment, it will affect our goodwill. So it has reduced our goodwill to 252 million. So for us to get our total goodwill, we must add this plus this. So our total goodwill is how much? 540. So our goodwill in our SOFP will be what? So we can do this. We can link this. We can link this so that we can recognize our goodwill. So our goodwill is 540. So please don't let us forget all our additional information is affecting two things. Additional information one talks about the cost of investment, abi. The cost of investment, these two are in the balance sheet, while the second two, this 600, is in the additional information. So this place will be zero. That is why this investment is zero. In a situation whereby this 1,110 and 600, maybe they are 3,000, we are going to have a balance here. So in your solution sheet, this will be a balance. But in this question, our investment is zero. So when you are very good, when you have solved a lot of questions, you don't need to show this investment. In fact, you don't need it, you just delete it. But for exam purpose, if you put it there, nobody will owe you. The major thing is this answer. It must be zero. So now let's move ahead. Now this impairment loss in accounting, when there is a debit entry, there must be a corresponding credit entry, right? So this impairment have affected the goodwill, right? So there must be a second leg. So where is the second leg? The second leg is that it must be shared between the parent and subsidiary company. It must be suffered by both parent and subsidiary company. Please don't let us forget. It must be shared between parent and subsidiary company. Now, what is the goodwill? It's going to affect the parent and it's going to affect the subsidiary. So now, according to the group structure, the group policy, what is the group policy? The group policy is it full goodwill or net asset method? It is full goodwill, right? So whenever it is full goodwill, please don't let us forget. Whenever it is full goodwill, impairment loss will be shared between parent and subsidiary. Also, negative goodwill. Please, if you remember the last question we solved, negative goodwill, that is an income. Negative goodwill is an income. Positive goodwill is an asset. Positive goodwill will be recognized as an asset in the statement of financial position, but negative goodwill is an income. It should be shared between parents and subsidiary if the group structure is full goodwill method, the group policy. If you remember last week, the fellow subsidiary we solved, the group policy is proportionate net asset method. That is the reason why parent company enjoyed only the goodwill. He enjoyed it only. However, in this question, they are going to share it. They will share the goodwill together and they will share the impairment loss together. But in this question, we don't have what? We don't have negative goodwill. So what they are going to share is what? Is impairment. So here we can quickly show. Let me insert a line here. Let me insert a line here. I'll call it share of impairment loss. Share of impairment loss. They will share it together. Share of impairment loss. Using what? Using the percentage. Please, who has an impairment loss? Is it Jewe or Gaba? It is Jewe or Ab, right? So what is their percentage of control? So NCI will be what? NCI will be 40%. Did you remember? 40% multiplied by 60. 6 times 4, that's 24, right? So impairment loss will be minus 24. And please, let's copy this immediately. Let's copy it immediately. Let's go to the retained earnings of the parent company. Share of impairment loss. The parent company will collect 60%. So 60 times 6, 60% of 60, that will be 36. So both of them will share that impairment loss using their percentage of control. So Bata in Jewe is 60%. If it is parent and Galba, this is the percentage you use. You use 52% and 48%. So hope that is noted. Hope that is noted. Sorry, excuse me, please. Please excuse me, please. I want to take water. Sorry. Okay, so sorry, let me continue. Apologies. Let me continue. I just need to. Ah, Mr. Mumin has a question. Please, can you use the chat box? Please, can you use the chat box? Please quickly use the chat box. You see, we are going very fast. This is already 10:30 and we are almost done. So that is the best. Once we are collecting question, we are taking question, our time is going already. So please use the chat box. So hopefully we will be very fast and let's finish up this question. Then any question we can ask, we can watch the recording again. So we have time. But at least let's achieve our objective tonight. Because next week we are moving to another topic, maybe fellow subsidiary or maybe piecemeal acquisition or another thing. So we need to finish this tonight. So let's go. Let's go. So we are done with additional information for which is impairment, right? Yes, we are done with that. Let's go. Let's go. Additional information 5. So what does additional information 5 says? So additional information 5 says during the year October 31st, 2016, Bata had sold inventory to both Jewe and Gaba. Bata sold inventory to both Jewe and Gaba. Then the invoice price for the inventory was 480 million and 360 million respectively. Bata invoice goods to achieve a markup of 25%. Remember, I explained what is markup. Markup is the profit on costs, 25% to all third parties, including group companies. At the year end, half of the inventory sold to Jewe remained unsold, but the entire inventory. Okay, somebody is asking question. Let me check. Let me check. Since Jewe and Gaba, since it is Jewe and Gaba, no, it is not Jewe and Gaba. It's Bata. It is Bata. That is the group. It is Bata that is showing that is testing the impairment too. So they now told us that between Bata and Gaba has no investments. It has no impairment. However, Jewe suffered an impairment. So it is between Bata and Jewe and Bata and Galba. So it is not Jewe and Galba. Please let's take note. Hope that answers your question, Mr. Mumin. It is Bata. It is parent company that is carrying an impairment. Remember, in line with IES 36, impairment in subsidiary can happen. So that is impairment of CGU. So a subsidiary can be treated as a CGU. So that is what happened. So now let's go now. Let's go. So they sold goods to each other at a cost plus or markup. Another name for markup is cost plus. Don't let examiner to bobo you. You can see cost plus in the exam. It's the same thing as markup. So at 25%, including all the group company. At the end of the year, inventory sold to Jewe remain unsold. Inventory sold to Jewe remained unsold, but the entire inventory sold to Gaba has been sold to third parties. So now, if you look at that additional information, it is an information about what? Unrealized profit. It is an information about unrealized profit. So what is unrealized profit? Unrealized profit is profit on goods sold to your subsidiary that is unsold, that has not been sold. That is why they call it unrealized profit. So now our first additional information, our first workings of this night is what we are going to. Please look at my screen, please. So now let's go to our workings note now. So we need to do what? We need to calculate unrealized profit. We need to calculate unrealized profit. Calculation or determination of unrealized, unrealized profit. So if you look at the information that examiner gave us, examiner said what? Examiner said the goods to Galba has been sold to third parties. If you look at that information, the entire inventory sold to Galba had been sold to third parties. All has been sold to third parties. However, to Jewe, all of them have not been sold. So we need to, so all those, the goods that was sold to Galba is realized, it is regarded as a realized profit. So we don't have an issue about it. So you do what? You ignore. Once the goods have been sold and the profit has been realized, please, we'll just come off face. Let me use that broken. Let's come off face. No looking face, just come off face. Our main problem is what? Is unrealized profit, and that is what we want to calculate. So unrealized profit, sometimes it can be POP and sometimes it can be on URP. So please, let's use URP, unrealized profit. What is the formula? The formula, please, let's cram it. The formula is constant. It is margin multiplied by value of unsold goods. This is the formula. Please, let's cram it. Another thing we must cram again. Cram unrealized profit. In fact, in the exam, it usually come out very well. Unrealized profit. Margin multiplied by value of unsold goods. And that is the reason why we ignored the unrealized, the profit of Galba, because all the goods has been sold. It is only Jewe that remained, and they said it is 50%, that half of it still remain unsold. So, and that is it. So what is our margin in this question? That is what examiner will do for us. So examiner will not give you margin. If you look at my formula very well, margin times value of unsold goods. But examiner will not give you margin. Examiner will give you markup. Another name for markup is called cost plus. You can see it in the exam, or they can use cost plus or markup. It is a profit expressed as a percentage to your cost. That is called markup. While the profit expressed as a percentage to your sales is called margin. So here in our formula, it is margin. So how are we going to calculate it? We need to convert markup to margin, because the formula says we should use margin. Formula says we should use margin. So what will you do? We are going to convert. Let me put it here. MB note. Convert markup to margin. We must. It is a must to. Why? Because examiner give us markup. Assuming examiner give us margin, We don't need to convert to. Please, let's take notes. Please, did we take note of that? Assuming in the question, the examiner gave us margin. Examiner said, the margin in that question is 20%. We are not converting anything because the formula says margin times value of unsold goods. Examiner give us margin, we don't have a problem. But when examiner give you markup, you must convert to margin. Why? Because we are in professional level. Examiner will find problem for us. There is problem. Examiner will not give you margin. Please don't expect margin. No. Please don't expect margin. They will give you markup. They want you to convert because we are in professional. So that is it. So now, let's now convert our margin, our markup to margin now, so that we can solve. So our URP will be is equal to, it will be how many percent? 25% abi over 125. So you do 25 over 100 plus 25. So assuming it is 20%, it will be 20 over 100 plus 20. So it will be 20 over 120. But remember that this is 25. So it will be 25 over 125. You add that numerator to that down, you add it together. Multiply by what? Value of unsold goods. So what is our value of unsold goods? For Galba, Abi? For Jewe, 480. The value of unsold goods was 480. And they said half has been sold. So what are we going to do? We just open a bracket. Let's say 480 million, right? Let's put million here. 480 million. Let's use small letter. Hmm. 480 million divided by 2. You know, they said half has been sold. So it will be 25 over 125 times 480 divided by 2. I think that should be 240. So let's press calculator. 25 over 125 multiplied by 240. What is it going to give us? Please, you can help me use the chat box. I will appreciate. Okay. 48 million. Thank you. Thank you, ma. Thank you, ma. Thank you, ma. Thank you. 48 million. So our URP is 48 million. Our URP is 48 million. And let's do the adjustment immediately. Adjustment. Please don't forget, whenever you solve, please, you must do adjustment. And it must affect a debit side and a credit side. And that is why your balance sheet must balance. In real life, your balance sheet must balance. But for example purpose, please don't balance your balance sheet too. Let me say it again. Don't balance your balance sheet too. Why? Because there is no time. You might have made one single mistake in calculator or something, but you'll be struggling to balance your account. So there is no time. Don't bother to balance your account in the exam hall. But in real life, your account must balance because your adjustment will affect debit and credit. So it must balance. But in the exam, don't balance. Don't worry. Just do your additional information. Do your workings. Do what you want to get. You will get your answer. I don't think you can just get 30-30 until you balance your account. But if you do the right thing, you can be correct. So now let's finish up. What's an adjustment? This unrealized profit will be deducted. Let's use deduct, or let's use less. Less 48 million. Less 48 million from inventory. Let's use retained earnings. Retained earnings of the seller. Please, let's take note of the seller. Please, who is the seller in this question? Is it the parent company or Jewe? Please, let's check that question again. And inventory. Inventory. Sorry, I'm on my Excel sheet. I can't see the consolidated inventory. So this is the adjustment. We less it from retained earnings, which is credit retained earnings, and debit we less from it. So we debit retained earnings and we credit inventory. That is the accounting entry. So who is the who is the seller in this question? Let me check my, okay, the parent company is the seller. Thank you. So that is it. The parent company is the seller. So Patabi. So let's go to retained earnings of the parent company. We're in our working note 5, right? So we say URP, unrealized profits on inventory. So which is our working note 1, right? You know, it's our working note 1. Let me put relevant working note 1. Relevant working note 1. How much is it? 48 million, right? Assuming parent company is the seller, where are we going to remove this? Assuming subsidiary Jewe is the seller, where are we going to remove this 48 million? Let me ask that question first. Where are we going to remove that 48? Assuming the working note 2, Abi. Thank you, ma. So that is it. We remove it from working note 2. Assuming the Jewe is the seller. So we remove it from working note 2. We just come, and that's why I usually say it. Please leave lines in the exam. We just come to our working note 2 here. We just do what? We just insert another line. So when we insert another line, what are we doing? We just say URP on event. We just less it. From DOA or DOC, it will be DOC. But we don't know, maybe it's DOA. But when you read that question, you see that it is DOC. So you remove from this DOC. So remove on this DOC. Assuming it is ACCA now, you now calculate deferred tax. Then that one, they have problem. You now calculate deferred tax again on unrealized profit, because when you have an unrealized profit, tax will affect it. So you calculate deferred tax. But in ICAN, this is ICAN. We don't worry about deferred tax. So that's why you leave so many lines. Leave lines. Nobody will penalize you. So, well, yeah, let's go. Now, let's do the second leg. We have not done the second leg. So, what's the second leg? We said we should remove from inventory. So, where is our inventory? Inventory does not have any line item. So, let's remove from here. You know, inventory is in current assets. So, let's remove it from here. Let's remove it from here. So, we are fine like that. We have deal with that additional information. So now let's deal with the last information, additional information, and let's balance our balance sheet. If you can take 1 or 2 questions before 11, I think we can take. Then let's go. Let's go and rest. It is not easy. Let's go and rest. So now let's go. Now additional information 6. Now they said Pata purchase a deep discount bond. So purchase a deep discount bond, an innovation financial instrument in the Nigerian capital market for 500 million on November 1st, 2016, switching from its equity holdings in market where equity has suffered huge loss. So what they are telling us that Pata invested in deep discount bond. So that is a financial asset. Purchase of deep discount bond is a financial asset. We have two types of financial assets: an equity financial asset and debt financial assets. So this purchase of deep discount bond is debt financial asset. You can buy a bond. Know that the name is a bond is a liability. You now say, okay, this is a financial liability. No, this is a financial asset because Bata purchased it. He purchased that asset. So it is an investment, financial asset. So, and they told us that he bought it for how much? 500 million on 1st November 2015, switching from equity holdings. So Bata has bought equity holdings. He has bought shares. He has bought shares. Shares is what? Shares is an example of equity financial asset. They said the market has suffered huge losses. So he doesn't have any other choice than to do what? To purchase another financial another financial asset. This time around, he now purchase debt financial asset. Now let's go. The bond will be redeemed in 3 years' time for 640 million. The and that is investment. Can you see investment? And that is why, as an accountant, we are financial advisor. We can advise our clients. For those of us working in audit firm, in financials, it is good to invest. Something you buy 500 million. In 3 years, you are now going to collect 740 million. That's the future value. 740.75 million. So that's in 3 years' time, you earn over 200 million from investment. So that is the future value of that amount. And I carry that amortized costs in line with IFRS 9 financial instrument. Since this question is November 2016, IFRS 9 has not been introduced. Just like the last question we solved last week. IFRS, the formal standard that deals with financial instruments is financial instrument IS 39. But now we are dealing with IFRS 9. So the accountant is not clear as the correct treatment of this amortized cost. As such, has not passed the correct entry to give the effect to the amortized cost valuation at the end of the year. At the financial asset is shown as 500 million. So if you look at my Excel sheet here, can you see my financial asset? Can you see that I did not put that 500 million? Because I know there can be an adjustment. And that is what I'm saying. When you are doing group account, please expect standard. They will test standard. The examiner tested what? IFRS 9 here. Now, yeah, let's solve the question. Let's solve the question. Let's solve the question. The, the bond was purchased for 500 AB and it will be redeemed in 3 years' time. Now, when did the parent company purchase that discount bond? Deep discount bond. When? He purchased it on 1st November 2015, right? Yes. Now, when is our consolidation date? When is our consolidation date? Our consolidation date is 31st October 2016, immediately in a year's time. However, he will receive that investment, that discount bond, it will be redeemed in 3 years' time. And we are consolidating in 1 year time. So since we are consolidating in 1 year time, we must report that financial asset in year one. What the examiner did for us was that examiner did the valuation of the financial asset in year 3. So examiner is telling us to determine the financial asset in year 1 because the difference between the date of purchase of that financial asset and the consolidation date, which is our own date, is 1 year. So as at year 1, how are we going to do it? And if you remember very well that the financial asset is carried at amortized cost. So whenever at what IFRS 9 says that when you want to value a financial asset at initial recognition, it must be valued at fair value, being the what? Being the purchase price. So on day one, which is November 1, the financial asset, which is the discount bond, will be 500 million. But year two, the financial asset asks us to use the amortization schedule. That schedule that we usually use. Maybe we have done IFRS 9. Yes, we have done it. Although we'll do it in revision again, we'll solve past question. Hopefully, I think I'm going to solve IFRS 9, IFRS 15 past question for you. So we can have more knowledge because those two are very, very key. So we are going to use amortization schedule to determine the value of the financial assets as at year one, using the effective interest rate method of IFRS 9. So now, the question now is that what is the effective interest rate? You know, for you to determine your fair value, we have determined the purchase price being the fair value. We must have the effective interest rate, EIR. But in this question, we don't have the effective interest rate. And that is what examiner is saying we should go and find. So in this question, we must find our effective interest rate. And please, let's quickly calculate our effective interest rate. Then when we get our effective interest rate, then we can now get the value of the assets. So that is what the examiner is asking. So now let's calculate our effective interest rate. So now that will be our working note 2 and our final working note. So calculation of effective interest rate. Calculation of effective interest rate. So calculation of effective interest rate. Now, for us to determine our effective interest rate, please, there is a formula. Now, presently, the present value is equal to future value into brackets 1 plus R raised to power minus n. Raised to power minus n. Raised to power here, okay. Raised to power minus n. Let's use small letter n. So this is the formula. Where our PV, let me break it down. Our PV is the present value. So presently, our presently that financial asset, we purchase it at 500 million. But the future value, this one is future value. While our R is what? Our R is the rates, which is the effective interest rate, EIR. We don't know. So then N is what? N is number of years. Number of years. So now let's quickly make it easy for ourselves. So our present value, currently, the present value is 500 million, right? Currently, it is 500 million. Then the future value, that means the amount we will collect in the future. Examiner also give us how much is it? Who can help me with that figure? Let me check my question. How much is it? Is it not 714 something? Okay, 740. 740.75 million. That is the future value. Now, the effective interest rate, we don't know. That is what we are even finding. We don't know. The number of years. What is the number of years they gave us? They said it is 3 years. The examiner said it is 3 years. Please, are we together? Please, are we together like this? Okay. So this is for we to calculate our effective interest rate. This is how we need to go. Now, what is our present value? Now, let's go now. Let's go. Our present value is 500 over 740.75, right? No, let's take it one after the other. Let's do it like this. Let's don't follow that way. Let's do it like this. This is what we are dealing with. This is what we are dealing with. Now, what are we going to do? We need our R to stay alone, Abi. So what the first step is to divide both sides. Divide both sides by FR. So if we divide both sides by FR, this will be PV divided by FR is equal to 1 plus R. These are supposed to be small letter. Raised to power 3. Raised to power n. So we have divided both sides by FR, right? So since we did that, now what do we need? We need, sorry, this is minus n, raised to power minus n. And apologies. This is minus n. It's not ordinary n. That is the formula. This is minus n. Raised to power minus n. Remember when we did our deferred consideration, this is also the formula you are going to use for deferred consideration. So now we need to do what? We need to separate. Now, if we want to remove our minus, we need to remove our minus. If we remove our minus, it will be PV divided by FV is equal to 1 over 1 plus R, 1 plus R raised to power n. Now we have removed that minus. We have turned it to mass class, Abi. We have turned it to mass class. So this is now mass. So, and that is our account will turn to mass sometimes. So we have removed that minus. So if you remember, my raised to power minus n, when we use our indices rule to remove that minus, we can use 1 all over. So when we use 1 all over, we can remove that minus. So since we use that now, if you collect like times, this is what it will be. It will be future value over present value is equal to 1 plus 1 plus R Why am I taking this big R raised to power minus n? So I have removed that one all over. So immediately I remove this one all over. Immediately I remove that one all over. This my V will come down. This my PV will come down. My FV will go up. So with that, for me to remove my raised to power n, what am I going to do? I'll use square root. Where is my square root here on my keyboard? Where's my square root? There's no square root on my keyboard. So let's just use, it will be square root. Square root n is equal to 1 plus r. So for me to remove this raised to power n, I'll just find the square root of fv, square root n of fv over pv. Then is equals to 1 plus r. So this is what I'll now explain to everybody. You now press your calculator. So you press to find the n root. What is our n? N is 3, Abi. You now find 3 roots. V. What is our f? 740. Our f is 740.75 divided by 500 million. This is it. 1 plus r. So we need to find the third root. Let me use big third root. Third root of 740.5 divided by 500. So when you press your calculator, just press 3. You press 3 shifts raised to power. You just press 3 shift this. You just press 3 shift. Let me write it on the chat box so that people will see it. In case you are writing, let me put it on the chat box. How you are going to press it in your calculator, it will be. So am I using FR? I'm using FV now. FV is not FR. Okay, I'm saying, so to press it in your calculator, just press 3 shifts. 3 shifts. Then this. You see something like this in the exam, in the calculator. 3 shifts beside your square root. Beside your s square. You see it. Then you already press your 740.75 divided by 500 first. So press your calculator. 740.75 divided by 500. You get 1 point something. Then you now press 3 shift. Then raise to power. You press your answer. You get. So that is it. So that is what you get. 740.75 divided by 500. So that's 1.48. So when you press that, you just press third root of 1.4815. So it's equal to 1 plus r. So that is it. So when you press your calculator now, you press 3 shift this, then press 1.4815, and that is what I got. I got 1 point one. I got 1.13998 is equal to 1 plus my R. So when I collect like terms, I can do what? I'll now get 1.13998 minus 1 is equal to R. Can you see? Can you see? I will collect like terms. My 1 will move to the left. It will turn to minus. So my R will be what? My R will be 0.13998 or 14%. So that's how we look. The effective rate is 14%. So our effective rate, which is R, is 14%. So that's what the examiner said we should get. That's our effective interest rate, 14%. So when we get our effective interest rate, then we can get the fair value of that bond in year one. So in year one, so uh, the fair value of the bond in year one will be what? So we are going to add, it will just be, we calculate the interest. What is the interest? The interest will be effective interest rate multiplied by purchase price. Remember A plus B minus C in IFRS 9. So that interest will be 14% multiplied by 500 million. So that is the interest. That is the interest. And what are we going to get? So in fact, all what we are doing, we are just wasting our time. The examiner have already gave us. The examiner give us the compound interest, the interest in the question. This 1.48.15 examiner give us. So, but we solve it due to the fact that if examiner did not give us, how are we going to get it? So, what next? Our effective interest rate. So, what is our interest? Our interest will be 70 is equal to 70 million. So that is it. That's our interest. 69.99 Abi. So approximately 70 million. Yes. So let's do the adjustment and let's finish up the. So what the adjustment? The adjustment is that IFRS 9 says adjustment. So the adjustment is that we add to the financial assets. We add to our financial assets and add to retained earnings. Retained earnings of the parent company. So that is the adjustment. That 70 million will be added to, we can do what? We can do it here. You can say that 500 million that they give us before plus 70. So the financial asset will be how much? The financial asset will be 570. Now, the second part is the retained earnings of the parent company, Abi. They ask us to add it to the retained earnings of the parent company. So if you go to the parent company retained earnings, how much is it? Interest on bond. Interest on bond. 70. So that is the adjustment. So the only thing that remains is this post-acquisition profit. So the post-acquisition profit in post-acquisition profit in Jewe is 270. One in Gaba is how much? 150. Right? Is 150. We don't have any other adjustment again. So let's do that one. I think that's all. Our account sheet balance. So we call it post acquisition profit. Okay, we already have a share of acquisition profit. So all we need is just name, Abi. We have Jewe and we have Bawa. We have Jewe and we have Bawa. So in Jewe, NCI is how much? It's 40%. Sorry, this is 40%. Multiplied by what's the post-acquisition profit in Jewe? That's 270. So the NCI will be what? 40% of 270. I think it is 108. Then here in Bawa, what's the percentage of control? Subsidiary. Subsidiary will be 48. Remember, multiplied by 150, right? The post-acquisition of Bawa is 150. So, and that one will be 72. And we see. So we can copy these two of them. I can copy this, then I can paste it here in my working note 5. I'll just change what? I'll just change the percentage of control. Check that. So percentage of control here will be 60. Why percentage of control here will be how much? 52%. So Jewe in the share of acquisition in Jewe will be 162. Why this will be 52% of 150, it will be 78. So all the adjustments, we have dealt with the adjustments. We have share of impairment loss. This will be negative. Unrealized profit will be deducted. Interest on bond will be added. Then share of profit will be added. So when we do this, I think we can get our correct answer. Our OC does not have any adjustment. This is our NCI. This is our NCI. This is our goodwill and the likes. So we are done with this question. We are done with the question. So we should balance it up, but there's no time. once your adjustment is fine, please, there is no need to worry yourself. Please don't balance it in the exam hall. That's it. So that is it. Thank you very much for people giving me the figure. Thank you. So Mrs. Olaiton, is it Mr. Olaiton? Please, can you use the chat box before we close shop? I'll balance this sheet this very tomorrow morning. Tomorrow Monday is holiday. I'll send the Excel to you. I just need to rest. Time has gone. So time has gone. Because if I take two questions now, I'll collect another question, will answer another question. Please permit me to end the class, please. But if the question is very short, just type it in the chat box. Let me quickly look at it. Yes, the time has gone. Me too, I need to. In fact, I just struggle to take this class. I'm not that fit to take the class. But we cannot miss any class, please. You can send the message to my DM. Is on investment. Is not confusing. It's not confusing. Don't get the explanation. Don't worry. Don't worry. Maybe when you watch the recording one more time, or you can't send me a message. Maybe I can use voice note to explain to you. It is somehow confusing, I understand, but you must calm down. You need to sit down and calm down. It's something you will get. Yes. So yes, just tricky, but you need to calm down. So when you calm down, you will get it. It is tricky. It affects everybody, but you calm down. So that is it. The time has gone sincerely. So everybody, thank you very much. Our class continue next week. The balance, Abby. Okay. So I've already said that it will balance. Since our debit and credit will balance, it will balance. So that is it. I will send the sheet to us probably tomorrow morning. I'm very tired tonight. So I'll drop the recording. So I'll drop it. There's no problem. I'll drop it. I'll send the record. So thank you very much, everybody. Our class continue tomorrow. I said tomorrow. Next week, our lecturer is not available for tomorrow. So bye bye everybody. Let's take care of ourselves. Our class continue next week. Maybe piecemeal acquisition or fellow subsidiary. So bye bye everybody. Take care of yourself. Let's enjoy our holiday tomorrow.